afternoon, welcome to Closing Trades right here on ET Now. And after what looked like a quiet start, we've actually picked up nicely in the green. So about a 0.5% uptick is what you're currently sitting on. We're back, in fact, at that 19,400 print, and this without any support from key heavies like Reliance Industries, which continues to reel under pressure, down about 1% as we speak for RIL. Also, there's Jio Financial, which has debuted on the street. It's a 5% downtick that it continues to latch on to, and for the better part, it's been lower by about 0.5% or so. So Jio Financial, along with Reliance Industries, they're the ones which are beleaguered in trade. If you were to really pinpoint one sectoral trend, that's clearly infrastructure and power, led by Adani names. They are the ones which are really perking up in trade. In fact, power is quite the big performer today. Everything from an NTPC to a Tata Power, Adani Power, these names continue to hold very, very smartly in trade. Besides that, you can't really drop any sectoral trend. Yes, most sectors are in the green, but there are no big movers in there. Persistent, India Cements, GMR Infra, Astral, these are some of the liquid names which are actually holding out in trade. And other than Reliance, there's Idea, Hindustan Copper, Exide and PI Industries, which continue to languish as well. So let me bring on board Kunal Naresh as well as Vinit Pulinchkar to figure out where the market is headed and what is it that you should be doing in the near as well as the longer term. Kunal, hi afternoon. Let me start with you. What's it looking like for the index?
It's a good bounce for the index, but I'll not call it as an ideal bounce because we're still missing that zing of large cap stocks outperforming. So, even in the top 5, top 10 names on the F&O front, you don't have too many index stocks which are actually outperforming. There are not too many large cap, index names which are showing signs of any kind of short covering or even long built up or some increase in delivery data. So I think that's one of the major reasons why I would probably believe that we may just go through this process of bounce, maybe another 2 days of confirmation where we see large cap stocks starting to outperform. That's where we'll start to build up more confidence. But other than that, if the large cap stocks don't participate and the action is more towards the mid caps and small caps like what we've seen over the last couple of days, we'll just term it as a short-term bounce on the index.
Naresh, since you've been tracking the charts of Reliance pretty closely, what happens now? Jio Financial has listed 2,500 plus levels on RIL. When do you see a meaningful move on RIL?
So 2850 was the previous high. So 2600 remains that critical level now. Very clearly now that level becomes 2600 given that today Jio Financial is listed at 250 rupees roughly, or could be a little lower going forward. So 2600, whenever we cross that on Reliance Industries, that would be a game changer for the trend for the stock. And on the lower end, 2460, 2480 remains a support. So for now, looks range bound, but on radar whenever it crosses 2600. So the structure is still not bad, but the momentum should come post 2600 levels.
Okay, let's see how soon we clock in that 2600 mark on RIL, currently just about hovering around that 2500 mark, and clearly one of the key pressure points in trade today. Other than M&M, Maruti, HDFC Bank, SBI, they're also not really participating in today's move. Vinit Pulinchkar as well on the show. Vinit, hi afternoon. Just looking at the strength across the power sector, Vinit, and especially the kind of validation that you've got from GQG as investments as well, who have been buyers in recent blocks, both in Adani Power as well as JSW Energy. But given the run-up that's already transpired in most of the power sector names, along with their ancillaries like a PFC, REC as well, do you think that one can even get in at these levels?
See, it's a structural bull market. We have a long way to go. We're going to add about 450 gigawatts of power in the next 6 years. So I think given these kind of settings, and this entire infrastructure which is going to come is not going to be replicated it's not going to be brownfield. It's all going to be greenfield infrastructure, and that bodes very well for the entire ancillary pack as well as for the distribution and power generation companies. Notably, we like Coal India because I think over the next 4 years, we're going to get some very strong thermal power additions coming through. And along with that, we also like BHEL within the segment.
Vinit, but let's understand the setup of the power space. Yes, demand is moving higher. Regulations are getting better, but there are elections around the corner. I was reading somewhere that one of the political parties has already made a claim that will be, you vote for us and we'll give you free bijli and gas. Discoms are not in a great shape. So while central is doing great thing, there are state elections, Rajasthan, Chhattisgarh, Madhya Pradesh, and there is Mehngai, and there is central election next year. Don't you think this sector in a sense will not enjoy the benefits? I mean, look at OMCs, Vineet. They were used and misused when oil prices they went higher because of political compulsions. The same could happen to power.
Yeah, so we are baking in a scenario where we expect the present incumbent, which has been very, very disciplined, moving out of the scenario. So, whatever little readings that we have done on the political front, we believe that there's a very, very good chance that the existing incumbents would continue. They also have tacit support of the deep state, which is moving towards India. Because if you see globally, Europe is outspent in terms of spending power. US defense spendings have climbed interest rates, and there's a signal when they abandon their economies. And if you see, the only two geographies which are going to grow is going to be Africa and India. And between the two, India is politically very stable. So, and if you want a stable and a strong government, which the present incumbent has been given, it has got tacit support of the deep state. And I'm sure that the way the things is playing out, I'm quite positive that the present incumbent will continue. And given that kind of a scenario, there is very little that the political dispensations at the state levels can do, because people have figured out in Karnataka what happens when you do all this stuff. So I guess, I would want to play the bull story, and only if the other, there's a spring of a surprise in terms of other dispensations coming into power, will I change my view. So till then, I will continue to be positive.
Kunal, you tell me, where within the power do you have conviction to buy even at these levels? Because most of these stocks have already run up quite a bit.
See, I think NTPC still looks very attractive to me on the charts. I think the stock has shown signs of a lot of consistency, and when you see change of behavior, change of trend for these stocks, and we are talking of it from a longer term perspective, those trends they last significantly higher. So just for an example, REC, PFC, these stocks, they managed to break past about their individual 9-year, 10-year, or maybe even more in terms of time frame highs for themselves. And look at what has happened for the stocks post that. We've seen these stocks moving up another at least 30 to 40% above the 10-year breakout for themselves. So I'm not expecting a similar kind of an upward trend for NTPC, but in terms of price trajectory, the stock should continue its uptrend. 215.16 is where the stock is trading right now. I think that's a solid bet from current levels.
Vineet, I'll just have another follow-up question on the power space. There's NTPC on one side, pure utility, a bit of a green play, but a lot of thermal play. There is Tata Power, which is giving me transmission distribution, and also a play on renewables. They are saying we will not expand in thermal. There is Adani, which is giving me perhaps a play on distribution and little bit also transmission. What is the best model to buy? Because power is a very generic word. It's indeed very generic.
So I'll tell you, between all these counters that you mentioned, I think the Adani transmission looks to be very, very intact. So there are two reasons for this. Is that irrespective of the scenario that plays out in the power sector, the transmission segment has the right of first access to all the collections of the discoms. So what happens is the discoms, they have to put money in an escrow account, which the first access is with the transmission segment. Secondly, as I told you, if you're doing 450 gigawatts of power generation capacity that we are putting up, you will need equivalent transmission networks, because you're not following the same routes of the existing infrastructure, because the renewable power sources are in different locations. So that is where Adani transmission scores out here. In addition to that, you have the play on the one of the busiest electricity consuming centers of that is Mumbai. And here the company is spending very heavily on their regulated asset going up every year. So they retain their they retain their EBITDA margins and also ROEs, right? So these are the two plays. So I think between all these plays, this stock seems to be quite risk averse. Additionally, you have to put in the smart meter vertical that is coming up. So I think Adani Energy Solutions, that is called now, seems to be a better bet compared to all the rest of the other guys.
This entire power space, in a sense, has completely, risen from like a phoenix. Persistent. Viresh, this is the odd one out, right? Isn't it? I mean, it fell less in the IT space, and it is the first one to be off the block in terms of recovery. Persistent, Viresh, is at 5,000 already.
So this was the first one to actually hit a new 52-week high. So it hit a new 52-week high in March of 23 itself, when the whole sector and even the markets were not in the greatest of the position. Then corrected by March end with the markets, went down to 4,000, and we are now back closer to 5,000. What is interesting is if you look at the previous top, which is where it topped out, was at 5,000 in 2022, which is where the whole of IT topped. And for the last 6 months also in the recovery, every time it has come closer to 5,000, 5,200, it has seen some bit of a correction. Now it has started making a higher base, higher bottom at 4,600. So the next league for the stock starts once it sustains above 5,000, 5,200 mark. So that would be a bigger breakout. So the trend is positive for now. Could be some more consolidation before it can break 5,000, 5,200. But clearly the first one to actually recover the most in the IT pack. So should be kept on radar. A leader move can continue going forward as well.
Okay, let's slip into a very quick break on that note with news that we're holding out okay. After a quiet start, we have picked up. But again, that large cap, heavyweight participation is a miss. And yes, Reliance continues to be a drag.
Off from the day's low, almost at the highest point of the day, 19,400. Yes, it's 19,400. Now, we walked into trade this morning. There were more signs of a breakdown rather than a bounce back. FIs were selling. There was a lot of global red. Yields were exactly not behaving themselves in the right manner. And globally also, 10-year paper had shot up. So even though you did not have too many telltale signs of a rara comeback, I think markets have delightfully surprised everybody. Nifty has reclaimed. It's not a big rally. It can be washed out tomorrow morning itself. But Kunal, the fact that you're going again, you're bouncing back. You're going again, you're bouncing back. Now you can argue and say that दीवार को ठक ठक करोगे तो टूट जाएगी. Or I would say दीवार इतनी strong है वहाँ से bounce back हो जाएगा. One of them is true, right?
Absolutely, Nikunj.
The Fevicol का जोड़ है.
That's one of the reasons why we were not anticipating, the sell-off till the time the confirmation doesn't happen. And that's why we were insisting that, let the markets break below that 90,300 mark and let it show substance of a change of trend, because those intraday dips towards 19,300 mark and then a bounce back again doesn't indicate fragility for the markets. But on the other hand, today's bounce, and I was pointing this at the start of the show, that it's not a very strong and a solid bounce, because you don't have too many large cap stocks participating and showing signs from in terms of recovery. So I think that's the missing factor for the market so far. So hopefully, assuming if this bounce continues for another couple of days, and then you see a large cap stocks number of participating, then we can change the view from expecting this to be a mild bounce to maybe a contra trend on the upside.
Important to mark what the European markets as well are up to, and pretty much across the board you are seeing 0.5% to about 1% kind of gains coming in. China's central bank, remember, has cut its one-year loan prime lending rates by less than expected. And left its 5-year rate unchanged. The market, of course, was anticipating a steeper cut and providing some more stimulus to the economy. So clearly, it's been a little bit underwhelming, this move by the Chinese central bank. That said, let's see how actually Asia shut shop in trade. And you did have dips coming in for China, 1.25%, no less. And then Shanghai as well, which lost about almost 350 points, equating to about a 2% cut coming in. Vinith, where do you think India is going to draw cues from? Will it be a global event which is going to dictate our markets? Or do you think it's going to be something internal like an inflation?
So, there are a couple of things that I would like to draw your attention to. One is that, the US Treasuries 10-year have broken all levels. So, they're looking very bearish, number one. Number two, if you talk of China, there is absolutely panic in their economy. They're not able to, they stopped giving unemployment data. So that is a sign of concern. And if we look at the Chinese debt, which is about $52 trillion, bulk of it which has been funded by Europe, So I don't think the cues are going to come from the international markets on the positive side. If at all, they're going to be negative. And we have seen RBI first suck out CRR. I think the next would be a token rate hike that comes to. So that is what is the scenario that I'm looking at. And so if we break the bottom of 19,300, so I believe that market could fall quite a bit, because in the last few weeks you've seen that the index stocks have just not performed. It has absolutely been a screeching rally, which has been led by the small cap and the mid cap stocks. Currently, the small cap stocks still look very cheap. They are at 13 times FY 25 earnings. So, although there are a number of indicators which point to, the move reaching slightly uncomfortable levels, I still believe that, if you have a good selection of stocks out there in the small cap, is the market to play in the current moment.
We may talk about this market doing extraordinary surge in this year, but frankly, from the beginning of the year, just look at the beginning of the year. Don't look at April. I mean, then you will become selective in terms of the data. 7%. Now you look at US markets, 44% up for Nasdaq. You look at other markets, the emerging markets also. India has done not like at the top of the heap. So for those who think that, okay, it's been a great run, great year, everything is just running on India's way. No, equity markets have not done that well in terms of the relative outperformance. Even though flows have been strong, earnings have been strong, macros have been decent. Another stock which is popping up, Trident. Naresh, it's been a yes and a no, on and off kind of in stock. Trident. Today it's just going gangbusters on strong volumes.
So very large volume seen today, and this is generally the last stock to do well in the sector. So if we go back even into the history, this is how it has performed. Now, if you look at it, what has happened with the names, we've seen a good move in Welspun India. We've seen a good move in Indocount. We've also seen a move starting up in a Himmat Singh. So Trident was the one which was left, not the market favorite as such, a very speculative stock in that sense, but technically a breakout done today. Given the sector has been in a lot of momentum, the stock can go towards that 45 mark slowly and steadily. So looks positive, but there are better choices in the same sector.
A lot of price volume breakouts, HEG, you got Graphite India. I just don't know why, because for HEG and Graphite India to do well, steel has to do well. For steel to do well, China has to do well. And for China to do well, a lot of things have to change fundamentally in China. And I really cannot find this kind of a correlation. Vineet, what's the best way to bet on this entire food inflation? I mean, tomato prices have surged, onion prices have surged, wheat prices have surged. What's the best way if somebody says, okay, this is a trend, how can I maximize from this?
So, you can only play the rice theme because everything else gets downplayed by the government. So if you see tomato surge has been countered by imports from Nepal, urad dal and other dals are being bought in from Mozambique, from Myanmar. So government has set aside a $1 billion fund to purely tackle this inflation. So it's going to be a combination of price duty cuts for fuel and flooding imports and raising export duty on onions, etc. So they're going to play that way. If you really want to play the story, the way to play this story is to play the rice export volumes, and which is Basmati plays. And here I think one of the best plays is LT Foods. There's KRBL, but currently I think LT Food has got good momentum, as well as it has catch up to play with KRBL in terms of valuations. So that is the one stock that I will.
Right. In fact, since we're on the subject of what's really happening with some of these names, like, we've been highlighting in HEG, Graphite India, let me quickly take it across to Lisa and find out why these stocks are buzzing.
Right, so both HEG as well as Graphite India, both are electrode manufacturing company. They are surging in trade today, and that is on the back of a report that has been released by Jefferies. So maintaining a buy on both the stocks, Jefferies has hiked the target price for HEG, a straight 48% increase for HEG. They have hiked the target price to 2,170 from 1,460 earlier. And for Graphite India, maintaining a buy on the price, they have hiked the target price by 23% from 420 to 500. 115. Now let's look at the reason why they have hiked the target price. Well, the reason for that is that Jefferies believes that both these companies will benefit from the increasing focus of electric arc manufacturing. So it is a play for decarbonization, and by 2030 EAF production ex-China could rise by 100 million metric ton, thereby increasing potential demand for electrodes by 200 K metric ton. So both HEG as well as Graphite, they are export-oriented players in this, and it augurs well for them, because for HEG, exports contribute around 70%, while for Graphite, they contribute around 50%. So on the back of decarbonization being a strong catalyst for these companies, both these companies are in focus today.
That's a Jefferies report, and I don't know whether it really holds a lot of substance. Vineet, crude seems to be moving in the wrong direction, and China seems to be again moving in the wrong direction. So either commodities have to come down or China has to recover. And I've never seen this kind of a toss-up. Which way would you lean? Buy the China story and revisit metals and commodities, or sell commodities because China isn't going to do anything?
It's a very very difficult situation. But within the commodity space, I think oil has a better footprint going ahead. The reason being that oil consumption has not come down. US special reserves are at 14-15 days, and they need to stack up. And there is constantly action from the OPEC Plus every time the US is coming into the market to cut back on production. So I think oil is going to be a play in the next 6 months, especially once the winter sets in. And the countries in the higher latitudes, their energy consumption for climate change starts peaking.
Okay, Vinit, great to have you on the show. Thank you as always for taking the time out and joining in. In fact, on that note, let's get some closing ideas going as well. Naresh, what's on your list?
So that would be a buy on NMDC. The stock has sustained above that 115 mark for the last couple of weeks, as well as in touching distance of a short-term breakout. Two tops around 119. Today it's come close to that. Sustaining above that would be a quick move to 130, 140.
What about you?
So I'll go for a buy on HUL, Hindustan Unilever. And my sense is that most of these FMCG stocks are extremely oversold. So these stocks should make a decent comeback over the next couple of days.
Okay, on that note, let's take a very quick break. When we come back, track the last half an hour of trade today. Back with closing trades right here in ET now. The closing trades are holding out okay. It's an okay day. We are back above the 19,400 print for the futures, 86 points higher. But yes, more livelier across the broader markets. While the Adani names, of course, are holding out. Adani Ports is now up almost 3.5%. Even Bajaj Finance has made a very strong move today. About a 3% uptick coming in there as well. There's Hindalco, Bharti up a good 2% nearly. Adani Enterprises is up 2.5%. And ITC as well has made a decent move today along with Tata Steel. So actually metals is making a decent comeback, although only sporadically. So let's see which way the move heads from here. There's of course Granules, Persistent, GMR Infra, which from the broader markets are also looking pretty lively too. Naresh, what's your sense on whether or not we can see metals now participate in the market move?
So in terms of metals, I would rather be interested in more in mining. So NMDC looks very promising. In terms of metals, the preference remains the same. Jindal Steel, which looks interesting, clearly a outperformer in the whole segment. There could be some bounce back in SAIL and Nalco, given that they are oversold in the near term. But I would still stick with NMDC as the top pick, and next would be Jindal Steel. It's the second level specialty steel which is doing well. Kalyani Steel, which we looked at a few weeks back, has done really well. There is a Vardhaman specialty steel which has started forming up in the last couple of sessions. So would be focusing more on the mid-cap, small-cap side of it, more on specialty steel, rather than the core steel companies or core metal companies. The mining ones still look interesting, so I would be focusing on NMDC as the top bet.
Bharti, very, very interesting. You don't normally see Bharti, in a sense, going against the basic mood of the market. Dr. Reddy, again, very interesting. Pharma is having a good time. It's really having a good time. Granules, Laurus, up Polo, pharmaceutical, that's the classification. Lupin, Syngene, Biocon, and then you got good old Aurobindo Pharma. It's having a good day. Mayuru Jeshi, what has turned for pharma? Why is pharma so much in demand? I mean, haven't everybody learned from the mistakes of pharma? Every 2-3 years, pharma becomes more like a seasonal play. And then when the tide turns, everybody says we will not go back to pharma. Then the tides again turns again. Then they go back. Then they say we will not go back. Then they go again. Pharma में पैसा तो बनता नहीं है.
But if you are at the right time, Nikunj, I think money can be made. I think a lot of underperformance in pharma was very, very evident a few quarters back. And I think that is precisely when pharma stocks have probably taken off. I think 2-3 factors which are affecting them in a substantial fashion, and to a certain extent structurally as well. One, I think pricing issues which have languished and beleaguered their balance sheets for a long time. Pricing issues is no longer a concern because the kind of price cuts that they used to take on the generic part of their portfolio, I think a lot of specialty launches are happening and are expected to get launched across pharma companies in the next few quarters and years as we speak, which gives them better margin stability. The second element obviously is a lot of FDA concerns that a lot of the pharma companies had. And as clearances are coming through, the entire specialty pipeline, both through ANDAs and FTFs, which will get filed, will provide better comfort in terms of better margin products coming through from their own facilities, where a large part of the backward integration for most molecules, as an example for Dr. Reddy's, is expected to be conditioned in the next few quarters, will probably aid earnings growth. And the third element obviously is in a time when cyclicality is probably ruling the market and when there is a lot of macro uncertainty, I think pharma probably comes to the rescue. So in my opinion, I think a lot of these factors came at play for the sector as a whole. And numbers obviously have been turning better over the next few quarters. The expectation obviously is with all these factors, numbers will continue to do well as we head into the second half and the next couple of financial years as well.
Lots of stocks are jumping above the 200 DMA, variety of them. JSW Steel, Dr. Reddy, JS, Adani Ports. It's turning out to be, Naresh, a good, solid day of comeback because it's not like a rally has been led by Reliance. It's not that, HDFC Bank has come back. It is ONGC above 200 DMA, Dr. Reddy, Bajaj Finance, JSW Steel. It's turning out to be a very impressive session, Naresh.
Yeah, so if you look at it, out of the 80-90 points we are up, we have a 30-pointer negative impact coming from Reliance and Geo Finance. So in that sense, it's a strong move. We could be considering it a 120-130 move. What we need to see is if we follow up over the next two sessions. And importantly, the case is the same. 19,250, 300 on the downside is acting as a support. 19,600, 650 is going to act as a resistance. So for now, we are still stuck in that band. Once we cross this band, that is where a 300, 400, or even a 500 pointer moves come on the Nifty. So for now, waiting for more confirmation on the index. Broader market has continued to remain resilient. A lot of stocks have done well across the board. The mid-cap indices did not see much of a correction. Neither as the small cap, neither the Nifty 500 or the Nifty total market cap. So overall, the bias still remains extremely positive. It's just that the momentum on the large caps is missing.
I just want to bring up HDFC Bank as well for you, and if we can just fire the 1 month chart, because this has actually been a rank underperformer of sorts. Yes, it's come off considerably. It's now at 1590, so a good recovery is what it's made from the time a year back around April or so when the merger got announced. But since then, Naresh, or rather Mayuresh, haven't seen any fireworks in HDFC Bank. Why the disappointment now that everything is done and dusted and behind us?
So I think a large part of the street, Ayesha, expects to believe that with the merged operations now expected to come through and reported as consolidated numbers as well, the margins will probably start tapering off as we speak. But I think what the street is also not getting is that they also have an access to a whole host of funds which are low cost in nature. So I think the margin tapering might be temporary in my opinion. As we head into the next few quarters and as advances growth starts showing a strong uptick, where HDFC Bank, if you notice all the banking counter numbers, Ayesha, has been very, very conservative. Their management came on board saying that we do not want to probably we do not want to probably overlend to the sense that they do not want to disrupt any asset quality pressures going forward in terms of unsecured lending. And entirely, I think with these two perspectives, I think the NIM contraction might be very, very marginal as we speak. And advances growth should head out as we head out into the second half and the next financial year should be extremely strong as well. Again, I think the base that they are operating out of purely in terms of their advances and deposit growth is pretty humongous as we speak. All the tech issues largely behind them. And even if valuations are at a premium, which it is always commanded, I think the second half numbers should be relatively better as we speak. And therefore, we remain optimistic on the bank. Anybody holding it should continue holding the bank.
Right. Okay. That's the take coming in on HDFC Bank. Has been a very, very meager move of about, I think, only 8% in the last 52 weeks or so. But let's get in the buzz on D Street. And Nuvoco Vistas is one stock which has been propping up across the dealing rooms as well. So let me take it across to Sharad, find out what the chatter across dealing rooms is this afternoon.
Well, yes, in focus we're having Nuvoco Vistas, and what we are hearing from the dealers is the buying being seen in some HNI as well as DI counters. Apart from this, looking at the stock, there is also a block trade which happened in the day's trade from the NSE exchange of almost 9 lakh shares. Recently, the company had come out with its Q1 numbers, and surprisingly, it was an outperformer as the industry had reported a weaker set of numbers. Apart from this, also the key DIs which are already invested in the company includes the names of SBI Mutual Fund, Mirai Asset Mutual Fund, as well as ICICI Pru Mutual Fund. The stock is also coming near its 100 DMA levels, and also the stock is still down by almost 25% from its highs seen last year. Looking at going ahead at the triggers going ahead, there is what the channel checks is suggesting is the pricing power is expected to come back to the cement companies, and especially as the monsoon season wanes out going ahead. This is coming in for the entire pan-India basis, but on a medium-term basis, on the other hand, there is certain pricing war which might be expected to intensify, at least in the western regions of India, after the acquisitions coming in from the Adani Group.
Okay, that's Nuvoco Vistas. That's across the dealing room chatter this afternoon, and why it's buzzing in trade as well. Just looking at the screen right now, so while Reliance continues to languish, and that is still down about almost 1%, we're back at that 19,400 print surely for the index, but Bajaj Finance is scaling up higher. A couple of the metal stocks like we were highlighting earlier, they're looking good. IndusInd Bank, ITC, you've got an Apollo Hospitals, Infosys is doing okay, TCS is holding up 1%, and then there is LTIM as well, which is up by about almost 1.5%. Of course, there's Persistent as well, which has sprung up almost 3.25% as we speak right now. That is one stock we should pick up because that's been quite the big buzzer in trade. 5,009 is where Persistent Systems is currently in trade. Mayuresh, just wanted to get your sense on IT, whether you're a buyer or have been a buyer in the decline that the IT sector across the board has seen.
So surprisingly, I think we are waiting for pullbacks, Ayesha. Very frankly, on the mid-cap, it will probably come through, but they're just not coming through. I think two perspectives here. One, I think the valuation obviously is on the higher side. If you probably look at the mean standard deviations of the last 5 to 10 years for the sector as a whole, and most companies within the sector, KPIT Tech, extremely optimistic commentary in a gloomy scenario as well, with strong client wins and order wins that they've probably reported, which probably ensures very steady dollar and constant revenue growth. At the same time, I think companies like Persistent, LTI, Mindtree, Coforge have delivered a decent set, and the management commentaries have been very, very optimistic. They do not believe that pricing issues will probably come through, order wins will continue. And as EBIT margins start normalizing after the first half, where wage hikes and the rest in terms of an increased allocation of operating expenses largely come through on the balance sheet, I think numbers should probably remain extremely stable even in the second half. So honestly, I think waiting for pullback on these stocks because they are a little bit away from the basis that we've got in key pivot levels at markets with India, and a large element of valuation still not being in the comfort zone plays out with the extended boost that they have given. But we'll definitely have a look for pullbacks on stocks like a Coforge, a KPIT, or even a Persistent.
Sun Pharma, Praj. Let's look at it. Nuresh, we've tracked Praj for a long time. I mean, is something special happening there? It's almost at 500 now.
So finally, the stock has started sustaining above that 450 mark. If you look at the last 2 years, there was always a lot of promise in the stock. The stock would make a marginal new high and again flip back towards the 300 mark. So it saw a very huge rally in 2020-21. But after that, every time we looked at it as a breakout, it flopped out. So again, we are seeing that pause around 460 to 500 levels, a marginal new high from those levels. But if it sustains 500, that could finally mean that a 2-year breakout doesn't play and we could see a move towards 600, 650 also.
The one stock that let's just, bring up that one up for you on the screens has been Bharat Forge. And I think it's hit a record intraday high as well. Of course, news today being that the company subsidiary, that's Kalyani Strategic Systems, has secured an order worth about 850 odd crore rupees. Even the volumes are almost 1.5 times the 20-day average trading volumes on Bharat Forge. That stock has been holding up higher by about almost 1% odd. I don't know if we have snippets of the interaction that Nikunj had with the management over the weekend. We will just get back to you. But Nikunj, what's been your takeaway since you met the management in Pune?
See, Aisha, Bharat Forge has always been this whole play on trucks and car sales, largely trucks and very little in terms of dependability in terms of European market and US markets was high. They got hit because of COVID and then they got hit because of war. And that explains why there is a deep cyclicality in the business. But the Bharat Forge of future, which is what the management is telling us, is going to be highly, it's going to be powered by different engines. And I'm using engines purposely because they are now in the business of making defense. They are now looking at moving manufacturing gear up, and they are really looking at flying high in terms of the aerospace. Bharat Forge of 2020 versus Bharat Forge of 2025, I think there would be a lot of difference, and the over dependence on just one category, which is Class A truck sales, and the Europe and the European and the US market, I think is going to come down. The problem with Bharat Forge is that whatever I'm speaking right now, I think markets have realized that. And that is the reason why, even though numbers were okay and European subsidiaries are turning around, the stock has seen an enviable run up. It's all been this one side rally for Bharat Forge. So while the management will continue to deliver what they're indicating in terms of the changing profile, I guess somewhere from a market standpoint, the stock has seen a very strong run up. So let's play out a excerpt of our interaction with the Deputy Managing Director, that's Amit Kalyani. If there is a billboard which has just one mantra which you believe in, what would that billboard be?
I have one poster in my room that says, "What if everyone's wrong and you're right?" That don't follow the herd. But everybody follows what is easy to do. What is difficult to do is what makes you successful. Developing technology on your own. Spending 12 years in developing your own products when nobody gave you a chance. That is what makes you different. That is what makes you unique. That is what makes you a champion.
All set to close at the highest point of the day, almost at the highest point of the day. Global markets, let's look at them. What do we have there? A lot of green. Global markets are giving you a strong, support, so to speak. You have to rely on global cues to understand whether markets are peaking out or not, because in isolation, nothing's going to happen. I think the cue will actually come from the European markets. But two stocks, Kunal, which are worth revisiting again. Good old SBI and good old HDFC Bank. We're talking about a comeback, we're talking about the markets moving higher, but even ICICI Bank, so the three horsemen of the Nifty, the three private banks, two private banks and one large PSU bank, they're just not doing anything.
Yeah, and I don't expect anything very immediate into these stocks because, for example, SBI has broken below the 200-day moving average, and that's, I think, a concerning point for the stock price because, holding its long-term average is one of the more critical aspects for the trend to remain intact. But when, these stocks, they show signs of fragility or trend reversals, that's where these stocks, they tend to break those long-term averages, and I think SBI has already done that. So, even in the last 3 or 4 days, the stock has seen a bounce of 3%, 4%, but the bounce is unable to take the stock past above its 200 moving average on closing basis. And I think that's a concern which is emerging for the stock. I would expect SBI to actually go into a bit of a sell-off mode yet again, hopefully the next couple of days, trying to retest at 550 mark. if in case the stock forms a double bottom, that's where we can probably expect that maybe the worst could be behind the stock price. But looking at the short-term price trend, it looks a lot more weak. Even for HDFC Bank, the stock has been just sideways at the 1600 mark in the last couple of days. But sideways has two kind of trends. One is either there is lack of participation, or even though there are long built-up formations, but it's unable to lift off the stock prices. Both of them, they indicate a bit of negative connotations for prices. So again, not too much bullish on either of these private sector banking names or SBI, at least in the short term.
Okay, let's get in some BTST trades as well. Going on that note, Naresh, what are your BTST ideas?
So first is a buy on NMDC close to a short-term breakout, stop loss at 117, target price of 123. Second is a buy on LIC Housing Finance, ex-dividend in the last two sessions, multiple tops at 430, 440, setting up for a breakout. Stop loss at 417, target price of 430.
Right, Kunal, what about your BTST trades?
Well, J&K Bank is something which I highlighted last week, so that's looking attractive even at current levels. It's actually moved up higher, above 93 mark. So traders could look at a revised target of 98. Stop loss could be kept at 90 for J&K Bank. And the second would be a buy on Bajaj Finance. That stock has shown signs of bullish engulfing pattern today on the chart. So buy with a target of 7,200 and stop loss could be kept at 69.50.
Okay. Naresh, why is SBI not going anywhere? Credit growth is strong, subsidiaries are doing okay, insurance market leader, credit card market leader, mutual fund market leader, but the stock is no longer the market leader.
Second, I think the expectations, Nikunj, in terms of numbers delivery and what they probably delivered, a little bit on the softer side when it came to asset quality. And therefore, I think the expected loan provisioning that a lot of these banks are probably providing at this juncture is something that has probably spooked the street as we speak. The second element is how much of a NIM contraction can actually come through. Because if liquidity is getting sucked out of the banking system, and if this continues as per the RBI directive, I think high-cost deposits are definitely going to hit the banking system, where the contraction of NIMs might be a reality. I think a lot of participants on the street believe that SBI's contraction can be a little bit worse off than what the street is probably anticipating. And third, I think in terms of the valuation perspective itself, when you compare a lot of the larger PSU banks, including State Bank, Bank of India, Bank of Baroda as well, I think the numbers were reasonably good, but I think valuations are also fair as we speak. So I think it's all about numbers, delivery and expectations, where the street believes that numbers can be a little bit muted for all these factors combined together. And PSU banks might probably languish a tad bit more because the aggressiveness that private might show in terms of lending, both secured and unsecured, I think the public sector banks might just fall a tad bit behind in that respect and perspectives.
Right, okay. That's the take coming in on some of the bank names right now. Tata Power, look at that one. It's climbed up a good 4.5% in trade. 240 is where it's currently at. And Kunal, after a while, you're seeing such a significant move on Tata Power, right? Which I think was the darling stock of, or one of the darling stocks of 2022.
Absolutely, Ashan. I think the stock had been absolutely sideways since the last 2 years. I think the stock, I think I remember clearly, I think that it had almost gone back below that 200 levels multiple times in this last 1-2 years of attempt towards the stock trying to get into correction. But then every time the stock went sub 200 levels, of course on the back of some negative news flow, it tried to get into a demand zone. And every time the stock on a broader perspective managed to protect those 200 levels on the weekly as well as on the monthly charts. So which means that this 200 mark for Tata Power is a huge support as well as a strong demand zone. What we are now looking out for is that when would this time-wise consolidation get over for Tata Power? It's showing signs of pickup every now and then. Even last month or so, I think the stock was almost at 250 levels. From there, it corrected back towards 225, 230 mark. Today, it's back again at the 240 levels. So, how far can the stock continue to consolidate, and how strong or how sooner can the stock break out? I think that's something to watch out for. So, interesting short-term charts, but again requires a lot of confirmation on the upside.
Okay, for now at least it's firing all guns. Let's see whether this momentum continues or not. By the way, for the market as well, we are now almost 0.6% higher. So marked recovery with some of the large caps not participating. SBI, Reliance, HDFC Bank all sitting on the sidelines. In fact, M&M is actually down, Maruti is flat, Bajaj Auto is flat, HDFC Life, Unilever, Sun Pharma, Even ICICI Bank has perked up just a wee bit, is less than 0.5% higher as we speak right now. So large part of these heavyweights haven't quite participated in the market move today. But yeah, the market has managed to eke out gains and managed to hold above that 19,400 print. Naresh, where do you think leadership coming in if the index were to move higher? Would it be banks or would it be some other sector?
So as of now, Reliance could be one which could be on radar. Second is HDFC Bank for a bounce. So as of now, most of the cases are bounce. We are not seeing a clean breakout anywhere in the heavyweights, and that's the reason we are not seeing much of momentum in the large cap names. We are only seeing momentum moves on the broader market. But autos continues to be a leader. The weights are lower. So for example, a Mahindra and Mahindra has done well. A TVS Motor has not corrected, etc. So auto continues to be leader. Banks could be the one on watch, which is where ICICI or Axis, if they turn around. But for now, watching, because it's all confusing in terms of the fact where majority of these heavyweights have just been at the same price. They've not gone up or down meaningfully. So once with the heaviest weighters, HDFC, ICICI, Reliance, these are the three names. At least one of them needs to fire to actually create a trend.
Kotak Mahindra Bank, HDFC Bank, State Bank of India, they are just not going anywhere. And Naresh, you go back to that same point again and again, which we've been talking about it, that Bank Nifty is down 5% from the recent high, Nifty is down about 3% from the recent high, small and the mid-cap stocks have not fallen at all. If the Bank Nifty is down by 5%, it clearly means the market lacks leadership and Nifty ain't going anywhere.
Absolutely. So if you have 35 to 38% of the index weighted financials, and if nothing happens there, we get into that period of sideways zone for the index as well. The only case is, if we look at Bank Nifty, we almost went back to the same prices where we were in December of 2022. So overall, being too sideways for long, even a little bit of a bounce could create good enough opportunities on the index. So for now, watching it very closely, if HDFC or ICICI can actually make a reversal.
Okay, let's begin winding up for the day. Kunal, Naresh, Mayuresh, good to have you guys on the show with us. Tomorrow, of course, you've got NetWeb Technologies, wherein the anchor lock-in period ends in terms of a queue. You've got HCL Technologies, AGM as well. So let's see what comes out of that. And yeah, Aeroflex Industries, the IPO is going to open for subscription. So that's pretty much the primary market action that you can see. For today, it's not all that bad really. We've managed to definitely recover from the session lows and we've managed to eke out gains 70 points higher. But let's see whether the markets and the heavies, more importantly, can muster some more of an up move or strength and can take the Nifty higher from these current levels. Tata Power, GMR Infra, Dixon, Persistent, India Cements, these have been some of your big performers today. Amongst the large caps, of course, Reliance was the rank underperformer there. Let's revisit what Jio Financial Services is actually closing in on its debut day. It's still lower by 5%. 248.90 is where it's shutting shop for the day on the day of its debut. The other laggards today have been an SBI, M&M, HDFC Bank, Maruti has closed in absolutely flat, Hero MotoCorp, Sun Pharma, ICICI Bank, Kotak. Most of these stocks were really pretty much sitting on the sidelines itself. Not much of participation coming in from here. Metals did okay. Couple of these names like a Bharti, IndusInd Bank, LTIM and ITC had a decent day today with an uptick of about 1.5%. But that's pretty much it. Let's see how tomorrow actually pans out from here. What sort of global cues we wake up to. We'll see you tomorrow morning at 8 a.m.